Welcome back to Trading Hour, and now shifting our focus to the shrimp export sector. Now, as per a CRISIL report, Indian shrimp exporters will see revenue growth of around 8 to 10% this fiscal. Now, this as CRISIL anticipates a recovery in demand from key importing nations. They also add that there will be revenue growth despite the higher duties for Indian exporters in the US. Remember, India along with Ecuador and Vietnam account for around 2/3 of the global shrimp exports. To discuss more on this, we are now being joined by Rahul Guha, the director at CRISIL Ratings. Rahul, good morning. Thanks a lot for joining in. Now, what is giving you this confidence apart from the factors that we just highlighted, that this revenue growth for FY25 for shrimp exporters will be around 8 to 10%, considering US is one of the biggest consumers of shrimp, and there we have duties being imposed there for exports. What's the rationale behind this?
Good morning, everyone. Thanks for having me on this show. As you rightly said, US definitely is the key consumer market for Indian shrimps, contributing almost 40% of the exports from India. If you look at the signs of recovery, we do see at the ground level the demand has been improving. US recessionary and inflationary trends are getting controlled. So that's kind of giving an impetus to the overall demand. Coming to the point on investigations about the countervailing duties and the ADDs, yes, there has been a little bit of restricted channel procurement by the importers there or the aggregators there. But if you look at the recent data, we do see that on a month-on-month basis for the month of April, the overall supplies have gone up to almost 50,000 metric tons from India. This is up from about 47,000 metric tons of the previous month and also the month in the previous year. Also, if you look at the month of July, August till about October, November, this is the peak period when the supplies from the Indian markets, they increase, and the overall demand also goes up in the US as well as the EU. So even though EU remains a little muted, we believe that the increasing demand in US will continue to give almost a 4 to 5% jump on the overall volumes for the year.
You know, Rahul, you were mentioning about US contributing almost 40% to the overall shrimp exports there, and you mentioned that there are duties as well. But do you believe that this situation on this countervailing duties that you spoke about, because I'm assuming India has around 3.9 to 4% of countervailing duties on the exports to the US, have you heard that this situation is likely to ease, because your report suggests that the final deliberations are yet to be made? Is there a timeline that you could share on when there will be more clarity on this?
So we don't have anything at this point in time from the Federal Register point of view. But what we understand is probably in the coming quarter, we should have a little better clarity on this. It remains a monitorable in terms of what is going to be the CVD that gets levied, especially on Ecuador, because that's the principal competitor at this point in time for Indian exporters.
Okay.
Speaking of Ecuador, Rahul, and Ecuador just overtook India as the biggest exporter of shrimp in the world, with falling behind there. Is the countervailing duty the only reason why this has happened, or have there been other factors responsible for this as well? And what can India as a market now do to reclaim that top spot when it comes to exports?
So there are 2, 3 things that we need to look at. I think in the post-COVID period, the freight costs, they went up significantly for the Indian exporters because of lack of vessels at that point in time. The demand was a little bit muted at that point in time in terms of discretionary spends on shrimps in the principal markets of US and Europe. Ecuador, on the other side, what has been doing is over the last 4 to 5 years, starting 2020, they have been investing a lot on their infrastructure. They have improved their brood stock. So that means their overall quality and overall productivity has gone up significantly as compared to the other shrimp producing nations. Their proximity to the US and Europe mean that when most of the Southeast Asian and Indian exporters were grappling with higher freight prices and container availability issues, they were able to supply to the US and EU at much lower prices. As a result of which they could surpass India and take the top spot. The second thing also that needs to be looked at is there is a lot of free trade agreements that's being discussed between China and Ecuador. Now, China is the second most prominent market for Indian exporters. We do almost 18% of our exports to China. Now, if these relationships between the Ecuador and China, they go any further or deeper into the shrimp trade, I think that's going to be a little more headache for the Indian exporters. Now, coming to your second question, what could the Indian exporters do to reclaim the top spot? I think India has largely been a commodity market or a commodity player in terms of the shrimp market. If I have to look at almost 85-90% of India's exports is commodity. That is the simple, straightforward, deveined shrimps that we talk of, with about 10 to 15% in the value-added category. Now, if India invests towards improving its infrastructure, namely, say, the cold storage, the processing facilities for creating more value-added products, I think that's where the gameplay is going to change for the Indian exporters, because that's where they rise up in the value chain, command better pricing, and probably that will enable them to reclaim their top spot. Apart from that,
Rahul,
obviously, upskilling of labor, I think that also remains a critical issue, because if you have to get in the value-added segment, I think labor plays a key role, apart from the machinery that I talked about.
Okay, Rahul, got that. Just very quickly, we have another only barely 30 seconds left on this conversation. So just tell us, I know you were expecting realizations to improve for shrimp exporters this year. What could be driving that, and what is the kind of profitability or margin profile improvement that exporters can look forward to, and what will be the factors there?
So maybe I'll take the second question first in terms of the operating profitability. I think 2-3 reasons here. One, Ecuador, the pricing that Ecuador has been doing, and they have been discounting the prices for a very long time. I think that will keep prices in check. Second, I think if you look at the key raw materials, the feedstock, which is fish meal, soya meal, I think those prices have gone up significantly in the last 2-3 years, and there are no signs of those getting corrected in the near term, which means that some of these increased costs will have to be absorbed by the Indian players, which will mean that even though the sales they go up by about 8 to 10% combined with, say, 4 to 5% on value and 4 to 5% on volume, the margins might not expand more than 50 to 100 basis points over the medium term for the Indian players. On the realization side, you need to look at how the dollar rupee will be behaving over the medium term. Plus, I think we believe that the volumetric jump that the Indian players will be seeing in terms of improved demand scenario from the US and probably EU over the second half of this particular fiscal, that could give a little bit of a fillip on the realization. So we expect about 3 to 4% improvement on the realization side also for the Indian players. Plus, one monitorable, how long is Ecuador going to continue keeping the prices low? I think that also is going to be a critical aspect to be looked at.
All right, Rahul, we'll leave it at that. It's a wonderful conversation that we had. Thanks a lot for joining in and sharing your views on the sector as well. That was Rahul Guha there of CRISIL Ratings on the shrimp export sector. But as we wind down on this edition of Trading Hour, we'd like to thank all our viewers for your continued support. CNBC-TV18 recorded a viewership of 93% on counting day for the most unbiased and accurate coverage. Stock markets were reacting to the votes being counted. We had a viewership of 91%. CNBC-TV18 beat competition by a massive margin from investors. To the India Inc., the CNBC-TV18 election headquarters was the go-to for election insights. Once again, thank you for your trust and faith in CNBC-TV18. From me and Surabhi and the team that put this show together, thank you for watching.